Hey guys, it's Aryan here from Gen Z Trader. Today we're going to be talking about a very important topic right here. Is the stock market a gamble? Okay? Is this a fool's game? Is it a waste of time? We're going to talk about that, clear out a lot of myths, a lot of misconceptions about it. Long video, so stick around for that. If you like what you see, subscribe. If you want to see my daily P&L posted, check out my Instagram, Gen Z underscore trader underscore. Um, Without further ado, let's get to this video, okay? So this is the stats that you hear when you talk about traders in specific. 90% of them do not make it. 90%. That number is way too high, but that's just what it is, okay? And the reality is that 80% or 90% of this 90% are gamblers. They're not actual traders. Okay? Because statistically speaking, and I will get into this more, but statistically speaking, after a certain time, if you keep tweaking your plan, you keep readjusting, you keep doing what you have to do and working hard, you will see profits. You will see profits. Okay? A lot of traders are gamblers and they are included in this 90%. They make up a bulk of this 90%. That's not how trading should be, but that's just how it is. You can see right here, 80% lose money, 10% break even. That's probably the 10% that actually have plans, actually trade objectively, so on and so forth. And then 10% make money. Okay, those are successful ones. That's the percentages you really hear when it comes to trading in general. So before I tell you why day trading or any sort of trading is not gambling, we need to talk about technical and fundamental analysis. Okay, so I only use technical analysis, and that's what we're going to be talking about today. Fundamental analysis is great. Um, this is what most people hear and use, I guess, for trading of their own or investing. Investing is really related to fundamental analysis. Technical analysis is more trading based. Okay, technical analysis is charts, different time frames. You have 2-minute charts, 5-minute charts, 10-minute charts, hour charts, so on and so forth. You have price, volume, candlesticks. Candlesticks is what we use. We do not use these lines. You see this basic line that a lot of graphs have when you look at them? That's not what we use. We use candlesticks, and I'll show you later what candlesticks are. Okay, this is what technical analysis is. Now we got fundamental analysis. You can see has EPS, valuation, balance sheet, income statements, all that good stuff. News, catalysts, go so on and so forth. That's basically fundamental analysis for you right there. I'm not going to get into technical fundamental analysis too much because that's not what we're here to talk about today. We're here to talk about is the stock market gambling, which is not. I mean, two ways, right? You can gamble, which is most of the 90% of the people that fail, and you cannot gamble. So it's literally yes and no. Okay, so this is how you choose not to gamble in the stock market. You choose to actually take it as I can consistently make money. First, you need to find an edge. Okay, there are so many people in the stock market. They don't care about you, right? They don't care about any of us. So they do what they do to make money. Basically, what I'm trying to say is these people have a lot of power, a lot of inside knowledge, and so much things that help them to get an advantage in their investing slash trading. So we also need to find some sort of advantage. We need to find, oh no, no, don't do that. We need to find an edge. Okay, what's an edge? It can be a pattern, multiple patterns. It can be off momentum. It can be off of news, fundamental catalyst. Oh, Tesla came out with a new battery. I know everybody's waiting for that. The new million mile battery. Oh, okay, this is news. I can play off that. That's my edge. So find your edge. Find something that makes you unique and sets you apart from everybody else in the market. All right. Two, prove it works. You cannot just find something and say, this is my edge, I'm doing this, and awesome. Great, you're doing it, that's amazing, but you need to make sure it works. You need to make sure it makes you money, and then later you can focus on scaling that. Okay? So, prove it works. Most important thing is right here. Create and follow a plan. You need a plan in the stock market, okay? The biggest thing the stock market does to traders is play off their emotions. Nobody's emotion safe in the stock market. Nobody. So you need a plan and you need to objectively trade. You cannot trade with any sort of emotion. Track your trades, okay? You cannot remember your trades. These type of trades work. These patterns work. These momentum stocks work. No, you need to track them physically. I'll show you that too. I'm going to show you my actual tracking spreadsheet. Also, track your emotions. This is also in the spreadsheet. Or you can have a journal separate for it. Track your emotions. You need to track what you were feeling at that moment. How were you feeling? Were you jittery? Were you calm? Were you faithful in the stock, which you should never be? Were you following your plan? How did you feel? How did you feel about your trading at that moment? Consistency is key. You will never be profitable if you keep changing something every day. But consistency is key. You need to consistently do the same thing to be able to track it. Am I right? Yes. You cannot track something if you're constantly changing it. Just like science experiments, you need to have controlled variables, and then you can have that one variable you're studying, or one or two or three variables you're studying. But otherwise, everything else needs to be controlled, because if you have six things like, oh, I just trade at this time and I trade whenever I feel like the stock is coming back up, and tangible things like that, you can't actually track it. You don't know if it's successful because it just doesn't make sense. Okay, so consistency is key. Please, 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 please remember that. 3, create a risk reward system you're comfortable with. This means knowing when to enter and exit a trade. Okay, knowing when to enter and exit a stock is very important, and this is one key thing that you should have in this thing right here in your plan. Okay, because this is also another thing that cannot keep changing. You don't enter whenever you feel like it. You enter based off objective reasons you have created for yourself in the past. Okay, see how a lot of this is objective and off a plan and off of consistency. Do gamblers really do that? Gamblers just, if this is a stock price, oh, it's heading down, let's buy. Buy a here, it goes down. Buy a here, right? Because now it's going to keep coming back up after this. Buy here. Oh, look, it's already down here. Look, we're using technical analysis, right? Look, this is some sort of support. Oh, it just keeps going, and you sell, and that's how you destroy your account. Okay? So gamblers don't use plans. Gamblers don't appreciate and value trading plans. Gamblers don't actually make these predetermined reasonings to get into stocks, to get out of the stocks, why they're getting in stocks, all this sort of stuff. Okay? Gamblers don't do that. So just to make you think, is this actually gambling? I mean, once again, it could be treated both ways. Okay, this is the worst strategy I've ever seen in my life, but I've just made it up just for fun. Okay, just to explain something. So every time the stock passes this purple line, which is called a 200 EMA, okay, don't worry about the name, just call it the purple line. Okay, every time the stock passes the purple line, you buy. Okay, so that's knowing when you're going to enter, what we just talked about. knowing when you're going to enter, you buy when it passes the purple line. And you sell, knowing when you're going to exit, you sell 10 bars after. Whatever it is, 10 bars after. Once again, the worst strategy I've ever seen in my life, but it's a strategy, okay? So 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. You sell on this bar. You bought here, sold here. Terrible strategy. It worked, whatever, but that's a strategy. That's how you should be trading. You have a predetermined entry price, not a price, but when to enter, and you have a predetermined exit price. Not, once again, not price, but when you exit. Okay? That's off of a plan. Whoa, what's that? A plan? I'm just saying that because a lot of traders don't use plans, and that's what gambling is. So, another stock, Facebook. Hopefully you guys know that. Once it passes purple line, you buy 10 bars up, whatever it is over here, you sell it. Okay, great. We're not here to discuss that strategy and how I was working on this these three stocks. They're all in the same sector anyway, so that's why the same sector moves up like that. Because this is all taken at the same time. Okay, so what I'm trying to say now is that this is how candlestick charts look. I'm not going to go into explaining what exactly this is, but this is what candlestick charts look like. In general, see this right here, that bottom, that's where the bar opened. This at the top is where this bar closed. This could be 5 minute, 10 minute, 15 minute, 1 hour, 1 week chart. Okay, so each candlestick would represent that. So let's say this is 5 minute chart. Each candlestick is 5 minutes. So this candlestick is also 5 minutes. So this top is where you exit. The bottom is where you, sorry. The top is where the bar closed. The bottom is where the bar opened. This line here, black line, that's where the bar been. Same thing here. That's where the bar has been. So stocks can go up and then close over here. So how do you represent that? This would just be what this is. And this black line is called a wick. Okay? Very basic candlestick lesson. So same thing here, another chart. And if you're trying that same strategy, you would get out somewhere here, whatever, that strategy works. Yay, I'm going to try it out, hopefully make millions. Okay, don't believe me, try this. Now I've learned this from my mentor at Live Traders, Anmol. He has a great video on this. I'm going to probably link it somewhere. Try this. If you don't believe that a plan works and a plan is what gets you to where you want to be, try this. Flip a coin 100 times. Every time it lands on heads, I pay you $2. Every time it lands on tails, you pay me $1. So, theoretically speaking, we both win 50% of the time. Heads 50, tails 50. That means at the end of the day, you profit $50. So you are still losing 50% of the time, but you're walking away with $50. So when a lot of people do refer to the stock market, trading is gambling, they also do say, oh, you lose. You lose what you risk. Yes, you do lose what you risk. Here you are risking $1, right? Because after every flip of a coin, you potentially could lose $1. But you were also aiming to make $2. So even if we have a 50%, you have a 50% win rate, you're still fine. You're still fine because you're aiming to make 2 times what you risk. If we win 50% of the time, you have lost $50, but you've made $50. Okay? Yes, if you were thinking that trading is all winning and that's how you be consistently profitable, no, you lose. See, the point is to find an edge. This is an edge too. This is an edge. Every time I win $2. Every time I lose $1. That's an edge, because as long as you're somewhere over 45%, you're going to be making money. That's your edge. Now you just got to find a good pattern, a good sort of entry price, right? Like a strategy. You have to find a good strategy now to make sure that you win over 50% of the time with this risk management. Once again, knowing how much you want to risk, you're risking $1 here, right? Knowing how much you want to risk is just as important as knowing when you should enter a stock. So now let's say you don't believe me that every time you win on heads, you can actually win $2. You can make 2 times what you lose. This doesn't have to be 200. Sorry, this doesn't have to be $2. It could be $200. We add an extra zero. And this could be $100. Okay? It's basically 2 times what you risk. You risk 100, you make 200. Risk 1,000, you make 2,000. Risk 1,000,000, you make 2,000,000. That's not possible though. So remember I said over here, track your trades. Okay? Track your trades, track your emotions, find an edge, prove it works. Then create your risk reward system. By the way, this is the risk reward system right here. Okay? The edge is more or less the pattern. This is also the risk reward system. Okay, so this is one of my trading tracking spreadsheets. Okay, I'm tracking a plan, some sort of strategy I'm doing right now, where time the stock breaks its high of this day or low of its day, I'm looking to buy / short. Okay, if you don't know what shorting is right now, you can search it up on YouTube. I might make a video on it later. I buy or short there. Okay, so this whole tracking sheet is tracking that one strategy of buying / shorting my scalps off of the high of the day and low of the day. Okay, I have different managements. 1R all or nothing, 1R all or nothing here again, 0.9R all or nothing. Like I have customized things for myself that I've created. Okay, if you don't know what R is, check out the other video too. That should really help you out, because knowing what an R is really important. In short, an R is risk. So if I risk $100, this is 1 times R. If I risk $200, it's 1 time R, right? So you're making $200, or 1 R is $200. Here we're going to be looking at, first of all, these are my real trades. These are my real trades I've actually taken, and I'm tracking them, okay? So we're going to look at this management strategy. We're going to look at 2R, 2 times what I risk, aim for 2R, and I go break even at 1R. Okay, so I'm going to aim for 2 times what I risk, and then when I get to 1 times what I risk, I'm going to move my stop loss at break even. A stop loss should always be in place. Always be in place. Always be in place. The stop loss is very, very, very important. If you do not have a stop loss, you're a gambler, period. Okay, every time you enter a trade, you should know where your stop loss is. Once again, check the R video. That explains more on your stop loss and your risk to reward. Okay, so here I tracked since 17th of August till this weekend, the 4th. I've tracked if it works or if it doesn't work. So every time it works, I put 2R, because that's the goal, right? 2R. If I've moved my stop loss up when it says right here at 1R, and it ends up hitting my stop loss and tagging me, then I put break even. Okay, so I tracked this specific one. We're not talking about these right now because these are less profitable. I'm about to talk about the more profitable strategy, right? So I tracked them. This is, once again, like 20 days, under a month. This is how much I would have made had I followed that. I do not follow this technique right now, but had I followed it, I would have made something around 16R. Okay, and that's sort of how you can aim to be profitable. There's so much more to understand about the stock market. Is not this simple at all. Okay, but I really simplified it down to a very basic level, so you can kind of get that, hey, I did this month. If I just follow my strategy, I follow my plan, I do what my plan says, I make this much money. If I follow whatever plan I follow and I get this every single month, wouldn't I just stick to that and do that? And is that making me a gambler? No. This is not gambling at this point. When you take this much time to objectively trade every single day, you show up, you do your work, you keep educating yourself, you're not a gambler then. You are not a gambler, okay? Just because there's always risk of losing money, that doesn't make this business a gambling business. It could, the stock market, trading in the stock market could potentially be a business, and it could potentially be gambling. You choose what you want to do. Breaking the plan, that's a huge problem. Breaking your trading plan that you have made is a huge problem, because your trading plan is your holy grail. That is the thing that's keeping you from being a gambler. That is the thing keeping you from losing more money than you should maybe lose that one day. You can lose money, and it's not a sure way of making money, and at the end of the day everyone's going to be rich. No, at the end of the day this is also a business in a way. So you can lose money. A lot of people do lose money because they do the wrong things. Doesn't mean you're gambling, just means that you're learning. As long as you keep it up, as long as you identify what needs to be worked on, you keep working on that, you do not stop, be relentless. Statistically, even if it takes you 2 years, 3 years, 4 years, 5 years, you will be profitable. And then you scale. Okay? So, before I end this video, I want to talk about what makes a gambler. I talked about what makes a trader. Let's talk about what makes a gambler. So, very basic things, very easy to do things. Not having a plan or breaking your plan, that makes you a gambler. Because the reason people don't have a plan is because it takes too much work, it's too hard to follow, so many excuses. But what you do when you don't have a plan, you don't have something to rely on, statistically and objectively, you're hoping the stock will work in your favor. I never hope the stock works. I never hope. But if you hope that the stock is going to do what you want it to do, how is that consistent? Right? How is that possibly something you can scale off of, maybe one day even make a living off of? How? If you hope. When you're a doctor and you show up to work, do you hope to get paid? No, you do what you have to do. You do what you know you have to do, and then you get paid. So when you're a trader, you don't jump into a trade hoping it will pay your bills. You take the trade based off of predetermined reasons. And then you let the statistics do its thing. Right? Of course, trades do not work, but you let the statistics do it. You let the market handle that part. You do what you can do, then the rest, leave up to market. You know how people say do what you can do and leave up to God, right? This is basically the same thing. Do what you can do what you need to do. For example, follow your plan, make sure you're doing everything right, make sure you're following a checklist. So many more things, okay? So many more things. This is not even close to what we covered yet. This is maybe a quarter of what actually goes on every single day in the market. So do what you have to do and let the market pay you. If you do good work, the market will pay you. Sometimes you do good work and the market doesn't pay you. Sometimes you do bad work and the market pays you. That's the most dangerous one. When you do bad work and the market pays you, because then you do it again. Another point, not understanding crucial signs, okay? If you're entering the stock right here after this many, 12 green bars, you're not understanding the signs that the stock's going to turn around. Stocks don't just go green forever, okay? You need to have technical capabilities, technical skills to be able to understand crucial signs. But that also makes a gambler, right? A gambler would go, oh my God, The stock is ripping. The stock is going. It's just gonna keep going. So how would I buy it right here or here or here? But never ever do that. Why? This is 12 green, big green bars. What are you doing? You're asking for the thing to turn around. It needs to rest. In this day, I'm pretty sure the market tanked. The market head down, right? But it needs to rest. You don't just buy big green bars hoping that it's just going to keep going. No. Let's say this is my strategy. Whenever it bounces off the same level, this will probably be, let's say, 50 bucks. Let's say it bounces off 50 bucks again. It makes a W pattern. Once again, example strategy. I buy it over here. This is an actual pattern. Actual pattern. It's called buy setup. Okay, it's called the transition buy setup. At once again, sorry. So once it does this, here, this is the safest spot to buy it. Safest spot to buy it. I think this is the safest spot in a pattern to buy that I've ever seen. Buy here, and I'm not hoping it goes up. I'm saying statistically, this is what happens. I did my work. I made sure I found a good pattern. I did what I had to do. Now market, you pay me or you don't pay me. It's up to you. But I found this beautiful pattern. So let's see if you want to pay me. I'm not hoping. I'm not chasing. I'm letting the trade come to me. I'd never go to the trade. Let the trade come to you. Last point, because this is getting a long video. People who need to be right. Okay? Let me just do this. Same thing here, right? People who buy here, they're like, no. I'm not hoping. I know it's going up. Look at these green bars. This stock is strong. It's going to be right. It's going to work. No, it's not going. Nothing needs to work. So people who need to be right are going to get hurt in this business. Okay? I'm not here to be right. Successful traders, they're not here to be right. Most well-off traders, millionaire traders, are not here to be right. The stock market is not a place to come to be right. You want to be right, take a math test and get the right answers. Or cheat on it, whatever. Right? This is not a place to be right. You're here to make money. So come here to make money. Don't come here to be right. Okay? If it doesn't work with you, get out. And that's my final point. Okay? This is a long video. If you stuck around till the end, thank you so much for watching it. I hope you learned something from it. I hope if you had that mentality that the stock market is gambling, this sort of shifted your perception. This sort of made you think, made you consider, just hopefully consider another aspect to what this could be. Okay? If you like what you see and you want to stick around, you can follow my Instagram and you can subscribe. My Instagram is GenZ_trader_. I post my daily P&L there. So every single day, whatever I make or lose, I post that there. Best place to see my results. And that'll be all for this video. Made it a long video. I'm sorry it took that much of your time. I really hope you learned something from it. Peace. Take care.